Okay, we have to start with the number. The one number that has just, completely flipped the script for one of the most watched companies out there right now. $816 million.
It's a staggering figure. It really is. And honestly, it's the kind of number that forces you as an analyst to rewrite your entire thesis on a company.
That is the headline contract Rocket Lab just landed with the U.S.-based development agency. And if you've been watching the charts, you know exactly how the market reacted.
Yeah.
We are seeing all-time highs here.
Oh, yeah.
The stock is trading in that, $86 to $91 range?
Yeah.
It is just, it's pure momentum right now.
It is, and for good reason. But I think a lot of people see the stock price flying, and they might miss the nuance of why this specific contract is such a game changer.
Right.
This isn't just another launch contract. They aren't just, sending someone else's box into space. This is for 18 missile tracking satellites.
18. That is not a small fleet.
And that matters because it fundamentally changes the narrative of what this company is. For the longest time, Wall Street looked at Rocket Lab and said, okay, cool, you're a launch company.
A taxi service.
Exactly, a taxi service. You put things in orbit. This deal says, no, we are a defense prime. We build the satellites, we put the sensors on them, and oh, by the way, we launch them ourselves.
That's the aha moment right there. They aren't just the taxi driver anymore. They're building the passenger, too.
Yeah.
And the scale of this, to put it in perspective for everyone, this single contract, it nearly doubled their backlog overnight.
Overnight. It's a massive validation of their whole strategy, their vertical integration. This is the proof of concept investors have been waiting for.
So welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Rocket Lab.
And as always, if you find our talks useful, please consider a subscribe, a like, maybe a comment underneath. We love seeing the debate down there. Tell us if you're holding or if you're selling into this rally. But, okay, let's strip away the hype for a second. The stock's at all-time highs. Everyone's excited about the defense contract. But we need to look at the engine under the hood, the hard catalysts.
Right. Because a stock price can fly on sentiment. We see that all the time. But it stays up on fundamentals. And if we look at that Q3 2025 earnings report, the numbers are actually backing up the story.
So break it down for us. What did we see in the report?
Okay, so revenue came in at $155 million. That's up 48% year over year. A solid beat on the consensus estimates.
Good number.
It is. But if you just look at that top line number, you miss the real story. The real story is the mix.
The mix. You mean where the money's actually coming from?
Exactly. Historically, launch was the big breadwinner. The rockets were the star of the show. It's what everyone sees on the live stream. But this quarter, Space Systems, that's the division building the satellites and the components, brought in $114.2 million.
Wait, hold on. I want to make sure I got that right. The satellite building side is now significantly bigger than the rocket launching side.
Significantly bigger, and it's growing faster. That segment was up over 36% year over year. It proves that the end-to-end strategy is really working.
That is such a crucial distinction. It's like if an airline also started manufacturing the planes for other airlines, suddenly you have two massive revenue streams instead of just one.
That's a great analogy. And usually the manufacturing side has, better economics, better stability than just the transport side. It balances the whole business out.
But I don't want to gloss over the launch side completely because they did set a record there too, right? I mean, 21 launches is not nothing.
Oh, it's huge. 21 Electron launches in fiscal 2025. That's a company record. And more importantly, they maintained a 100% success rate.
That cadence is just wild. If you do the math on that, that's roughly one launch every 17 days.
Yeah, basically every 2.5 weeks. It's incredible consistency. And in this industry where delays are the norm and rockets sometimes blow up, consistency is the product.
Right.
You're selling reliability. When a customer has a $1 billion payload, they want to know it's going to get there. Rocket Lab has proven they're the FedEx of space in that regard.
Okay, so revenue is up, launch cadence is record-breaking. Let's talk about the future money, the backlog. Because that $816 million deal, that's not in the bank account yet, right?
Correct. That goes into the backlog.
Yeah.
And the total backlog right now stands at $1.1 billion.
$1.1 billion. That's a lot of guaranteed work.
It is. But here is the stat that should matter to an investor. Roughly 57% of that backlog is expected to convert to revenue within the next 12 months.
Why is that percentage so important? Can you explain that a little more?
Sure. Sometimes companies sign these massive, headline-grabbing deals, but the money is spread out over like 10 years. It looks good, but it doesn't help pay the bills today.
Got it.
Rocket Lab's backlog is current. This is money coming in the door in 2026. It's immediate cash flow potential. It gives them incredibly high visibility for the fiscal year. Takes a lot of the guesswork out of the model.
And speaking of cash, their liquidity position is very strong. I think they ended the quarter with over $1 billion in cash and equivalents.
They did. That was boosted by that recent equity raise, which, diluted shareholders a bit, but it gave them a cushion.
A necessary evil, maybe.
Well, in this environment, cash is king. It gives them the dry powder they need to finish development on their new, bigger rocket, Neutron. They don't have to go begging for money in a tight credit market. They have the war chest to finish the job.
Okay, let's talk about margins. Because in hardware, this is usually where companies get killed. You can have high revenue and just lose money on every unit if you're not careful.
And this is where the story gets really interesting. It ties back to that space systems shift. Their GAAP gross margins hit 37%. That's a record high.
37%. For a space hardware company, that seems surprisingly high.
It's impressive. And on a non-GAAP basis, it was roughly 42%. Management is actually guiding toward 45 to 50% margins in the future.
How do they get there? Is it just efficiencies in launching? Or is it something else?
It's the components. Remember, space systems. They own companies like Solero, which makes solar panels for space. Those are seeing nearly 30% margins. The reaction wheels, the things that steer the satellite and other components, we're talking 60 to 70% margins on those.
So by selling the shovel and the pickaxe, the solar panels, the star trackers, they're boosting the overall profitability of the mission.
Exactly. High-margin components subsidize the high cost of launch infrastructure. It's a very smart ecosystem. They hook you with the launch, but they make the real profit on all the parts.
Okay, so the fundamentals look solid. Revenue's up, backlog's massive, margins are expanding, but stocks don't move in a vacuum. Let's shift gears to sentiment. What is Wall Street actually saying about this? Because jumping to $90, that is a serious run.
The reaction has been overwhelmingly bullish, but you can see the analysts are kind of scrambling to catch up. Their models didn't account for this kind of speed. Morgan Stanley just upgraded them to overweight with a $105 price target.
105. That's still significant upside from where we are today.
It is. Stifel raised their target to 85, and Cantor Fitzgerald. They reiterated their overweight rating at 72.
Wait, 72? That's below where it's trading now. That sounds bearish. Why keep an overweight rating with a price target that low?
It looks contradictory, I know, but you have to read their reasoning. They called Rocket Lab the only credible commercial alternative to SpaceX. They're basically saying, hey, the price might be running a little hot right now, but you have to own this stock because there's nothing else like it.
It's a structural play. The soft catalyst, the narrative. Investors are looking for the next SpaceX that they can actually buy stock in.
That scarcity premium is absolutely real, but there's a huge macro catalyst happening too. Defense spending.
Right. We saw the reports about the war secretary visiting their facilities. That was everywhere.
The Arsenal of Freedom tour. You can't buy that kind of publicity. But it connects to the bigger picture, this $1.5 trillion military spending push.
That's a number that's just hard to even wrap your head around, $1.5 trillion.
It is, but the drivers are simple. The geopolitical climate is tense. The U.S. government has realized it cannot rely on just one provider for access to space. They need independent missile tracking. They need resilient satellite constellations.
Basically, they don't want all their eggs in the Elon Musk basket.
Without getting political, yes. They want redundancy. They need a plan B that is just as good as plan A. And Rocket Lab is right there to catch that money. They're capturing that spend because they're agile. They can build the satellite and launch it faster than the legacy primes.
Now, I have to bring this up because we see in the comments all the time. Retail investors love this stock. It feels like a movement.
Oh, absolutely. Rocket Lab is currently the heaviest weighting in the Goldman Sachs GS memes basket.
The meme basket. That label carries a bit of a stigma, doesn't it? It sounds like gambling.
It does. It implies volatility. It implies people are buying it because it's trendy, not because of the math. But look, the stock is up over 250% in the last year. That creates a lot of momentum, a lot of FOMO.
But with that momentum comes the elephant in the room. We have to address it. Insider selling.
It is the headline that scares people every time.
CEO Peter Beck sold about $90 million in stock. The COO, Frank Klein, sold about $7.3 million. If the future is so bright, why are the bosses cashing out?
It's a fair question. The total insider selling is over $150 million in 90 days. It looks scary on paper.
It looks like an exit, like they know something we don't.
But context is everything here. First, look at the run. The stock tripled. If you were sitting on that much stock and it tripled in a year, taking some profit off the table is just rational financial planning.
Right. Buying a house, paying taxes, diversifying.
Second, and this is the technical part that gets missed, these were largely Rule 10b5-1 plans.
Okay, unpack that. Explain 10b5-1 for everyone listening. What does that actually mean?
Basically, it's a plan you file with the SEC months in advance. You say, if the stock hits X price on Y date, sell this much. So these sales were triggered automatically. It wasn't Peter Beck waking up, seeing bad news and panic selling. It was a planned event set up a long time ago.
So it's automated.
It is. And given the record backlog we just talked about, it looks much more like standard profit-taking than a lack of confidence.
Okay, that clarifies it.
Yeah.
So let's zoom out. We've got the bull case, we've got the context, but I want to play devil's advocate. Let's debate this. Pros versus cons. Because at $90 a share, this company is not cheap.
Not at all. It's priced for success.
I'll be the skeptic, the bear. Here's my problem. Valuation. The company trades at a sky-high multiple. We're talking 48 to 50 times forward revenue, not earnings. Revenue. That is priced for absolute perfection.
It's a steep premium. There's no denying that. You are paying for growth that hasn't happened yet.
And let's not forget, they are still losing money. They had negative free cash flow of nearly $70 million in Q3. Adjusted EBITDA was negative $26 million. So you are paying 50 times sales for a company that is currently burning cash. That's a risky bet.
That is the classic growth stock dilemma. You're buying the future, not the present.
And then there's the execution risk. Everything, and I mean everything, hinges on this new rocket, Neutron. It has to fly in the first half of 2026. If that rocket gets delayed by another year, that valuation could just collapse.
Those are all valid concerns, especially the valuation. But let me take the believer side, the bull case.
Go for it. Convince me why I should pay 50 times revenue.
You mentioned valuation, but you aren't factoring in the moat. We talked about vertical integration, the fact they build everything. This creates incredibly high switching costs. If the Space Force wants a responsive launch, Rocket Lab controls the whole stack. You can't just swap them out for a competitor easily.
So they lock the customer in. It's like the Apple ecosystem.
Exactly. They are building the Apple of space. And look at the scale. Revenue grew 734% over 5 years. You pay a premium for that kind of hypergrowth because it's so rare.
700% is hard to ignore. I'll give you that.
And about the cash burn, you mentioned the negative cash flow. But why is it negative? Not because the business is failing. It's because they are pouring money into R&D for Neutron. That spending is peaking right now.
So as the rocket gets finished, the spending stops.
The spending drops off significantly. And as Neutron starts flying, competing with Falcon 9, that cash flow should flip positive. You're looking at the bottom of the J-curve. The investment is heavy, but the harvest is coming.
And I guess that brings us back to the scarcity premium.
Right. There is literally no other public way to invest in a SpaceX competitor. If you want exposure to this in your portfolio, Rocket Lab is the only game in town for public investors. That commands a premium.
So it really comes down to whether you believe Neutron will fly on time and if that government demand stays this high.
That's the bet.
So what does this all mean for the timeline? If I'm looking at this stock today, what dates should I have circled on my calendar?
Short term, keep your eyes on late February. That's when Q4 earnings are due.
And we're expecting, what, 170 to 180 million in revenue for that quarter.
That's the guidance. If they beat that, or more importantly, if they raise guidance for 2026 based on that massive contract we started with, the stock could move again.
But the big one, the main event, is Neutron.
The Neutron launch. Targeted for Q1 2026, this is the make or break moment. If that rocket reaches orbit, it validates the whole medium lift strategy. It puts them in direct competition with SpaceX.
It's going to be a nail-biter. Every investor will be glued to that live stream.
It will be. But if we connect this to the bigger picture, the thesis has shifted. Rocket Lab has graduated. They are no longer a niche player. The $816 million contract proves the U.S. government trusts them with national security. They are a prime contractor now.
From niche to prime. That's a powerful trajectory. It's certainly one of the most exciting stories in the market right now. Well, we'll be watching that Neutron launch closely. Make sure you are subscribed so you don't miss our breakdown when that happens. Thanks for listening to Smart Wealth with Joshua.
See you next time.